Hey beautiful people, Ryan Hamer here today. Thanks for taking the time to watch this video. Please don't forget to like and share and subscribe. So today we're going to be talking about a consumer proposal and why it may or may not work for you and what it entails. Many years ago, I had to do a consumer proposal, had a horrible relationship, and I was heavily in debt and I was stressed up to my eyeballs. And unfortunately, one of my options were consumer proposal or a bankruptcy. And I had to weigh the pros and the cons of each. And it's like when you hear about a bankruptcy, it's like the scarlet letter. Nobody wants to do that. Nobody wants to think about it. And there's also the consumer proposal. So today, why I want to mention the consumer proposal is one of my friends came to me recently talking to me about it. And I told him, you know what? In my videos, I tell people that, it's best to try and get a handle of their debt as best as they can without having to go down that route for a consumer proposal or a bankruptcy. There's also debt consolidation, but sometimes it's not always easy to get a loan for debt consolidation if you are up to your eyeballs and your credit's already been affected negatively. So what a consumer proposal is essentially is it's a negotiation with your creditors, and if you fall within the parameters of say $5,000 to $250,000, then you are a Canadian citizen and you are over 18, then you would qualify essentially. So what happens is you first would have to, get all your stuff together, all your debts together, and you would have to meet with an LIT, so a licensed insolvency trustee. Got a few of those. I'm sure there's one in your neighborhood. And only they are licensed and they're able to negotiate on your behalf with your creditors. So you go to them, of course, they're going to charge you a fee. And you would list all of your expenses, all of your debts, and they need to see the budget, whatever, and they need to see who you owe and who you got to pay and whatnot. And then they would put the proposal together, right? And then they would submit it, and they'd submit it to the superintendent of bankruptcy, their office, right? And then what happens is your creditors have 45 days to respond. And hopefully you get a green light from all of them. If not, then there's some massaging that has to go on back and forth. But what happens is if the creditor whom you owe the most to, if they own the lion's share of the debt, they decide, hey, you know what? Yeah, we're going to agree to this. Anybody else you owe, that's included in the proposal, they're by default obligated to agree. They have to go on with it. They have to take what they get. And this is across the board in Canada. So no matter what province you're in, it's pretty much the same. I mean, there are going to be slight differences, slight nuances or whatever. Some licensed and insolvency trustees operate a little different. Some of them might be a little bit more hands-on. Some of them might have some different methods or what have you. But generally, it's the same across the board, across Canada. Why would this work for you? The other question I get is, well, what can I put in the bankruptcy? Not bankruptcy, excuse me. Almost got me. What can I put in the proposal, the consumer proposal? Well, generally, a lot of people will put in a line of credit. They have lines of credit. They have credit card debt. They'll have CRA debt. So if you got income tax issues, you can include that as well. And student loans. Caveat to that is it has to be from 7 years prior to the date of filing. So a long time ago, you couldn't include student loan debt. I mean, you can now, but there are caveats. It's always tricky with that one. And I know years ago you were able to put it all in without any sort of issues. But nowadays, it's a little trickier. So anyway, those are the types of things that usually people include, along with other unsecured debt. If you have credit cards, yes, you can include those as well. Another common question is, am I allowed to keep a credit card? Am I allowed to keep credit cards if I don't want to get rid of the credit cards? No, you got to put them all in. Some of them will allow you to keep one credit card provided that that credit card is paid off. A workaround is, while you still have somewhat decent credit, I didn't tell you this, but what some people do is they will apply for a credit card prior to the bankruptcy and insolvency, provided to everything becoming binding. So what happens is you give all your paperwork and then you apply for a credit card while the snapshot of your credit bureau report is still, decent, somewhat decent, and you get approved. It's still good enough for you to get approved for that credit card. You get that credit card and you put it to the side and you forget to mention it. You forget to open that envelope. And then what happens is everything goes through and now you're making your payment each month to the bankruptcy and to the insolvency trustee, right? You got to make your monthly payment to adhere to the consumer proposal. And then you also have that credit card that you got that you can still utilize. Sometimes, as I said, they do allow you to keep one, provided it's paid off. It looks better that way. Now, why this is important is because you're going to be bound for the next 3 years or so, 3 to 5 years, with respect to paying down that debt. And you also want to rebuild your credit in the process. So the workarounds are you can get a secured credit card. There's Home Trust Visa. There is Capital One. And if you're really good with your bank, sometimes you can do a secured credit card with them, but they probably won't touch you while you're in the processes of handling your consumer proposal. So that's something to keep in mind. Now, as I said, this is like high level I'm giving you. This stuff works. Doesn't matter the province you're in. It's pretty much the principles are the same. It works across Canada. So depending on how your debt is, remember I said it's like between $5,000 to $250,000. You're gonna want to really think about doing this because remember, it's like countdown to lockdown, right? You won't be able to qualify for anything within that time frame, 3 years, 5 years, and you can't get a house, you can't get a condo, you can't get a car. Well, you probably can, but you're going to pay through the nose. You're going to be subject to predatory lending practices. Oh, and I forgot to mention payday loans. You can also include payday loans in that. Any other unsecured debt, that Sears credit card, that Brick credit card, that Bay, those department store credit cards that have exorbitant fees and things of the sort, you can include those. And collection agencies that are holding on to, parking tickets and stuff like that. So you can include that stuff. Why this is beneficial to you is because now you're going to suspend the calls. The creditors are not going to be calling you. Collection agencies are not going to be calling you. Your wages are not going to be garnished anymore. So that's a good thing, right? It gets the stress off your head. Now, what can you not include in your bankruptcy? Well, there's certain things you cannot include. You got, I believe it's alimony, and you got child support stuff. Yeah, you can't get around that stuff, right? You have to figure that out. So I want you to really, really consider weighing the pros and cons. Now, what are the cons, right? As I told you, you can't apply for loans and things of the sort, but it does take the monkey off your back. It does take the stress off your shoulders. You don't have to be looking over your shoulders. You don't have to be avoiding calls and stuff like that because it's so stressful. And they say that one of the biggest issues within a relationship, it's not infidelity, it's financial improprieties, right? It's financial issues. So you're able to take the stress off your back. Your partner you and your partner can actually talk and come together and try and work things out, or at least try and move forward, or you'll see a way forward. If you have this option, you two can put together your money and try and pay down the debt or what have you. And that is a good thing. Or if you've recently come out of a divorce or a separation, then you have the debts on your head. This is something that might free up your ability to be able to make those child support payments, or to make those alimony payments, hopefully not, or at least pay for that lawyer. You know what I mean? So there's always a reason as to why you may have to do a consumer proposal, or you may have to do a bankruptcy. And I want you to think deeply about that. And there is no shame in doing it. If you have to do it, you have to do it. And it's about your peace of mind, your well-being, and what happens. It happens to a lot of people. I know people that suffered through COVID, and they suffered through a job strike. So many things can happen. You lose your job or what have you, and you're just not able to find another job in the meantime, in between time, to catch up. And there are different options available for you. So I just wanted to give you a high-level understanding of this. And I hope that it benefited someone out there. If you have any questions, if you have any concerns, as I said, please feel free to just drop a like for this video, share it with a friend, and put a comment. Leave something down for me in the comments if you found this beneficial. Again, my name is Ryan Hamer, and I thank you for taking the time to watch this video, and I'll catch you on the other side. Have a good one.